Harish sir, he's worked with Standard Chartered Mutual Fund, IDBI Capital Markets, and he was also part of the economist as economist in ING Vysya Bank before it got taken over by Kotak. He has worked extensively in fixed income, macroeconomics, and currency related areas, and in the banking and money market space. So he is also he's, by the way, the most sought after trainer by large banks, mutual fund companies, and he really does a lot of training for them. So I think now let Harisa take over.
Thank you, Jaishank. Good afternoon, everyone. It is a privilege to be here talking to all of you. I hope I'm audible. Yeah, I was saying it's a privilege to be here. Sorry. The last time I had something like this was during my wedding. That was scary. This one is not scary. So, this is a good one. I am going to talk about what I believe are the building blocks for wealth creation. So, the topic is about money. How many of us think money is not important? Anybody in this audience who thinks money is not important? It's irrelevant. So, you all agree money is important. I also believe money is important. I also, more importantly, believe what you do with that money is more important. So, if somebody says, I don't need money, is either probably very, very rich who doesn't need money, or someone who doesn't understand the impact of money. Because in today's world, which is very transactional to a large extent, money can do a lot of good things. So, it's about you, how you use your wealth to do impact. So, I have been a part of Jashank's life for many years. And through Jashank, I have got a peak view of how ISKCON works, for example. Though I'm not a part of the community, I know what he does as a part of what he does. So I know a lot of people in this community who has created a lot of wealth, but more importantly, use it for impact. And I genuinely believe money has to be flowing. There has to be a flow concept with money. If you hoard it, it doesn't work. So you get money, use it, spend it, give it will come back to you. The more you hoard it, I don't think it works. It has been my experience also. Initially, when I was much younger, probably 2021, I was only trying to accumulate money. Then I realized that the more I give away money, and I'm not saying giving away as charity, even spending in some form, I realized that the money is coming back, sometimes double, sometimes triple. And then I realized money has to be a concept of flow, not stock. But it is important. It is important to ensure that we not only earn, we also make the money work. So while all of you, most of you are very young, I can see that. Probably beginning of your career, beginning of your life, you have a long way to go. What I'm going to share is my 22 years of experience of managing money, including for myself and my family. And we have come from a very humble background, and how money has been useful and what do you do with it. And some do it yourself actionables. Some things that you can take away and say, if you do these five things, for example, whatever things, I think most of your money issues is taken care of. You don't have to complicate it. And that's why, if you see, I've said it's a boring process, boring in quote unquote. The most simple and the most important things in life are very boring. You keep doing it every day, it works over a period of time. Investing and wealth creation is also like that. We unnecessarily complicate it. So, what I believe is there are certain steps you have towards achieving that. Like for anything else, like your curriculum also has steps, wealth creation also will work as steps. I will speak probably for the next 50 minutes or so, and then I will open the forum for any questions and answers. Whatever you want to ask, feel free to. We all know who's Yamaraj, right? I mean, I don't have to talk to you about Yamaraj. It's a very interesting line which somebody told me many years back. You cannot bribe Yamaraj. What does it mean? We cannot cheat death. It's written somewhere. We don't know who has written it, but somebody has written that this is our life. At some point, we will leave this body, go somewhere else, but the physical part of this earth will be gone. Death is inevitable, absolutely inevitable. So, we are talking about wealth creation. We are talking about making money. We are talking about creating a lot of wealth for ourselves, for our family, for the community, for the world at large. But that is your plan A. And that plan will take some time. You cannot build wealth overnight. You'll do something today, tomorrow, day after tomorrow. Over a period of time, wealth is built. But while you are planning on this path, there's a bigger plan also, right? Which we don't know about. The God's plan. We don't know what God's plan is. What if we don't get that many number of years? What if I want to create wealth over the next 20 years, but my time in this earth is only for the next 2 years, which I don't know, by the way. So you start with risk management. You start with plan B. What if things go wrong? What if something happens to you in the journey of wealth creation? You're planning everything, but you don't know how many years you will live in this world. So the first thing you should do is, if you have financial dependence already, or if you're going to have financial dependence in the future, anybody who is going to depend on you financially, could be your parents, could be your spouse, could be your children, could be your siblings, could be the cause you are supporting, could be some community. You know that these kind of people are relying on you financially. And obviously, as you create wealth, you will help them. But what if you don't get a chance? So the first thing you should do is insure yourself. Insurance, super critical. This is the first thing. Don't be a 35-year-old person without insurance. Don't be a 50-year-old person without insurance. Be insured every single point in time. Till you reach a point where you have enough assets, you have built a lot of wealth. Even if something happens to you, all your financial dependents are taken care of. They will miss you, not financially. But if you're 25, 28, 30, you haven't created enough wealth because you are in that process, but something happens. What happens then? So always ensure you take insurance. And the only insurance you should take is a pure term life insurance. Simple. Some of us would have heard this before. Some of us would have already taken it. How many of you have insurance on yourself? You have a term life insurance on your life. Awesome. This is an extremely enlightened crowd. Is it an entry point for ISKCON? You have term life insurance. What a crowd. Everybody has insurance. Amazing. Second, the value of insurance. How much should your life be insured for? Obviously, higher the better, but that amount should be quantified logically as your total liabilities. If you have any liabilities, home loan, personal loan, educational loan, credit card loans, if you have any loans, the total loans you add up, let's assume the total loan is 50 lakhs, for example, plus an amount that your family can keep in a bank, earn interest out of it, and live peacefully. So, a lump sum amount, leave that in the bank, earn interest of 7 8%, and that should be good enough for them. Now, this figure could be 2 crores, 3 crores, 4 crores, I don't know. You calculate it, and then you take a life insurance for that amount. I always believe your life insurance amount should be so big, ideally, that if something happens to you, the family you leave behind, I don't know whether they will miss you or not otherwise, but they should be silently happy that you're gone. I know it's a very weird, rude concept, but they're like, oh my God, he left behind so much. They should not be in two stress. One is emotional that you have left, and one financial. So, as much as possible, take an insurance amount which will leave them in a lot of comfort. And do it only till the time you have built your assets. Because if you have built your wealth, You don't need any insurance at that point. And taking term life insurance is cheap. It's not expensive at all. So if you see the premiums that you will pay for term life insurance, I know it's a small slide and I don't know whether the audience can see it, but approximately 18 to 20,000 rupees per annum, you will get a life insurance amount of 1 crore. Broadly, 1 to 1,500 rupees per month, you can cover yourself for 1 crore for the next 35 years. If you survive in this world for the next 35 years, I'm assuming that you would have created your wealth by doing everything right, by earning, by investing, etc. But plan B, if something happens to you in the process, you have a life insurance. So a crore, 18, 20,000 per annum, especially if you're young, early 20s, late 20s, early 30s, premium is not much. But if you go into 40s and 50s, the premium will shoot up. So always take up insurance as early as you can. Most of you have taken it. But if your insurance policies values like 25 lakhs, 50 lakhs, 5 lakhs, 10 lakhs, rethink. Because if something happens to you and if your family members will get 10 lakhs, is it enough? If not, bump it up. Maybe your income is not much now. As your income increases, do your top up on insurance. Go from 50 lakhs to a crore, crore to 2 crores, 2 crores to 3 crores. A 5 crores life insurance, for example, will have something like a premium of 60, 70,000 rupees per annum. 5, 6,000 rupees per month. So if you cannot spare it now, maybe 3 years down the line, you can top up the insurance. The beauty of life insurance is with your age, the premium will not go up. Whatever is your premium will stay as it is. So, first step, please ensure you're adequately insured on life. Second, health. Take a health insurance for yourself and your family. Very important. I'm not sure whether you're aware. A lot of wealthy people also literally go bankrupt due to healthcare cost. Have you heard of Michael Schumacher? Michael Schumacher, Formula One racer, had an accident, not in the race. He was skiing, had an accident. I don't know whether you know, but he's still in a coma state, a vegetation state essentially, and they're almost bankrupt. Michael Schumacher's family is almost bankrupt. He had a lot of wealth, if you imagine. But then that's life. So I've seen a lot of cases in my wealth management practice where clients have a lot of money. Somebody gets admitted. Just a recent case of a friend of mine, his mother had a brain hemorrhage, got admitted to a hospital in Mumbai. 6 days in ICU, 4 days in normal ward. The total bill came to like 65 lakhs. Insurance will cover some part, but not everything. Suddenly, you have a big dent in your wealth. So, you don't want that. So, take medical insurance. It is not very expensive. Take it for your family. Take a family floater plan. I'm not getting into details of which plan. That's something which you can, if you want to reach out to me for, you can, or speak to someone who knows insurance. But life insurance and then health insurance are two extremely important tools in your life. Be smart. Don't take chances with life and health. That's not in your control beyond a point. COVID, for example, you must have seen COVID hitting normal people, right? Like healthy people. Suddenly, their life savings can be affected by that. Once you have insurance is taken care of, you are now saying, okay, I've worn my seat belt, I'm insured. Now I can go in my journey for wealth creation, which I'll come to in terms of what are the various things you can do with that. But most importantly, start with insurance. I've seen a lot of people who are inadequately insured. One big reason for that is LIC. So the generation before us, my parents' generation, would always have taken a LIC policy in my name. But the amount would be very, very small. Like when I turn 20, I will get an insurance amount of 5 lakh rupees. 25 years back, 5 lakh rupees was very useful and big amount. Today, 5 lakh rupees is not the same. And 20 years hence, it will not be the same again. So please ensure you cover yourself adequately. Your liability should definitely be covered by your insurance. Please don't leave your family a liability. plus whatever is needed for their living expenses. Once you have taken care of that, you can go towards your journey of wealth creation. And there, I would urge you to do a bit of planning. Take money management a bit more seriously than most people do. I genuinely believe life is not a rehearsal. Yes, we can believe in rebirth and the soul never dies. I agree. But I'm a little bit in the material world now. I'm a little bit in this current world now. You can not tell your hospital when you get admitted that is a momaya. You should not charge me. They will still charge you. They may also be an ISKCON community member, will they still charge you because that's their job. They're probably running their hospital. So you need to be very, very smart with the fact that you plan. And planning is very critical. You can start your planning at any stage, but I believe the right age would be when you're started earning, about to start a family or just have a family, like got married, and then you start thinking about what to do for the next 20 years. And when I say planning, you should have a fair idea about where am I now in terms of my wealth, how much do I have now, where is the income going to come from, how much will I earn, how much I'm going to spend, how much can I save every month, and how will this compound over a period of time. As you go deeper into 40s and 50s, the plan has to be more thorough because you will go into something called retirement at some point. Either you will take early retirement, where you voluntarily retire at the age of 40 from your corporate world, or you'll be probably working till 58, 60 and then retire. The word, the concept of retirement is changing in the world around us. For generation previous to us, for our fathers, grandfathers, grandmother, mother, that generation, retirement planning was having multiple kids. At least one of them will take care of them. Have 5 kids, diversify. Even if 2 or 3 are not going to be good enough, chances are that 1 or 2 will take care of them. My parents still financially are dependent on me. And we are the last generation who will take care of our parents and our children. Going forward, your children may be probably settled elsewhere by the time you're retired. And they may not be there to take care of you financially. And neither are the current generation expecting that. The world is changing. So, who takes care of your retirement? You need to plan for it yourself. Children's education cost has gone up anyways. So, the idea of having 4 or 5 kids can be tricky. Very expensive education. I believe in India, the higher education cost and the school cost itself is the biggest barrier which has been created to population control. I know so many people my age who has one kid do not want a second kid because the education cost is very high. They cannot afford. So that one kid or max 2 kids or 3 kids, you spend everything on them, they will do well, but you're not expecting them to take care of you after a point. So you have to take care of that. And retirement, second point is going to be a long period of time. You'll probably retire at 55, 60, or you will probably lose your job before that to an AI tool, and you will live till 85, 90. Expectancy of life is also going up. So we have like a 30, 40 years of retired life. How are you going to sustain all those years? You need to have enough retirement kitty. And that retirement kitty is not a specific figure for everyone. It depends upon your lifestyle. Depends on what you're going to do after retirement. So plan. I believe the moment you're 30, 35, your planning should start very aggressively because time will fly. You need to know what should you do at 35 and 45 and 55 so that by the time you're 55, 60, you kind of know that we are fine. Because if you're not fine, it's too late. If you figure out at 55 that you don't have enough money, then you need to be good with your children. You need to keep them happy because then they will take care of you. So retirement is very, very expensive and it is becoming very real in India. Please wake up to it as early as you can. The second important factor that you should be very careful about is a concept called inflation. Inflation. You all know what is inflation. I'm not getting the concept of it. What is the inflation applicable to you? What do you think is the inflation? I hope you know what is inflation. Your expenses will go up every year over a period of time. At what percentage will it grow up? I like an answer which I got 9.1, very specific. I got 6, I got 7, I got 10, I got 12. Do you agree with 2 points I will make? One, inflation is subjective from person to person. It depends on what lifestyle you're at. What I'm spending on and what you're spending on could be two different things, and the prices could be rising at two different rates. The prices at which, let's say, cow milk is rising may not be the rate at which oat milk is rising. I might be having oat milk because I like alternative milk. The rate at which sugar prices are rising may not be the rate at which stevia prices are rising because I am probably using sugar free. When we say vegetable prices, vegetable has potatoes also, vegetable has broccoli also, vegetable has some weird names we haven't heard also. And lifestyle is changing. So when someone says inflation in India is 5 to 6%, that is for India as a country, which still has 70% poor people who do not even have 20,000 rupees family income as of now. India is still poor. I hope you know that. So inflation is considering all of them. We are not in that bucket. We are slightly above and much beyond. So our inflation is not their inflation. So you need to know your inflation before you do your planning. I have seen people doing financial planning with 5% inflation, 6% inflation, 7% inflation without knowing what is their inflation. How do you know your inflation? You have to go back to a traditional method which our parents used to use a lot. I don't know whether your parents did, but my parents did. My dad, I remember he's 85 now, but he's not very healthy now. But when he was working and healthy, my dad every day in the evening will record all the expenses of the day. Have you seen your parents doing that? Do you do it? Every day, what is the expenses that happen? There's a diary that he's maintaining every day, every day, every day. Because the income is limited. You have to survive, so to keep budgeting. Do we do that? We have apps doing that now. If you're using credit cards, you can check the credit card statement and know what is your expenses. If you're using UPI, you can check the statements very easy. If you keep a track of your expenses, you will know what is your inflation. And I'm not judging here. I'm not saying that inflation should be less or more. It's your life. So you decide your own inflation. And there is something which we sometimes ignore when we look at inflation, and that is called lifestyle inflation. Lifestyle inflation is your lifestyle upgrades over a period of time. There was a time when you would probably travel. I'm not talking about you or me. Generally, if you look around the country, a lot of people would travel in trains. Trains. Bombay Delhi train. Right? A lot of them now who are traveling in trains now travel in flights. Their lifestyle has upgraded. By choice, they want to now travel in flights. Nothing wrong. But the inflation is now higher because a family trip of 4 train may cost you 2,000 rupees, for example. A flight may cost you 25,000 rupees. Earlier, we could probably go and stay in a small lodge or an Oyo room. But now some people upgrade their lifestyle and they will stay in a 5-star hotel only. Again, this is called lifestyle inflation. So we're still taking vacation every year. The cost at which the vacation is rising is not 5% or 6%. The cost is rising at 25%. Mobile phones. Mobile phones. If you change your mobile phone, let's say every 3-4 years to a new version, and a lot of new versions keep coming up, you will realize that your mobile phone expenses is actually growing up by maybe 15% compounding. I have a wealth management firm called House of Alpha. We have about 100 client families. When we calculate their inflation, all of them are about 12%. One of the biggest education, one of the biggest cost is education. Education cost is also rising at a very high rate. So if you're creating wealth, your portfolio, your wealth has to grow at a certain rate, which is more than inflation. So even if you're able to contain your inflation at 9, 10, 11%, your wealth has to grow at a rate faster than that. Otherwise, your wealth will never last. Simple logic. Your wealth has to grow at a rate faster than your expenses growing. So when you do your calculations, please understand there is something called lifestyle inflation. So if you're spending 2 lakh rupees a month at the age of 25, now the 2 lakhs is a number. You may say, no, I'm not spending 2 lakhs. I'm spending 50,000. Fair enough. You can just divide it by 4. If you're spending 20,000, divide by 10. But if you're 25 and spending 2 lakhs, in 40 years, when you're 65, at an inflation of 12%, the same monthly spend is 1.86 crore. Same monthly spend. If you're saying, no, I don't spend 2 lakhs, I spend 20,000, the 20,000 will become 18 lakhs per month in 40 years. And remember, your plan is to live for long. 40 years is obviously achievable. So your wealth has to ensure it grows and takes care of this. Otherwise, be nice to your children. So somebody has to take care of you at that point. So inflation is a monster which people ignore in their calculations. And I've seen people closer to retirement, enough wealth, but did not grow at all. Why? Because that wealth was put in fixed deposits. All their savings were put in some LIC policy earning 5% or 6%. They were just not growing enough because they thought we are keeping the money safe. But safe means it is not growing enough. And you have to make it grow. And you need to invest it better. And that is what I'm getting into now, that you need to invest your money better. Obviously, to invest money better, you have to first earn it and then save it. And the most important thing I have seen with people who have created a lot of wealth is cut down on expenses. The most common thing I have seen with people who have created immense wealth is they keep their expenses under control. Their lives are generally very simple. They don't have a lot of fancy needs. Even when their income goes up, their lifestyle doesn't necessarily go up that much. They're still living in the basic means that they have. It's a very good thing to have because then you can save more as you go along. And as much as you can save, you know the effect of compounding when wealth can be created that way. Can you increase your income in a certain way every year? Depends on a lot of factors. Can you keep a tab on your spend? Is a large amount up to you. You, your family, what you decide in terms of lifestyle. So the moment you talk about wealth creation, the first thing is savings. And then, of course, I'll come to the concept of returns and how much can you earn and portfolio and asset classes and so on and so forth. But the key is just to go back, take insurance, make sure that is done. When you're doing planning, know your inflation. It's like a task I'm giving you. Go and find your inflation. Over the next 3 years, you can find it. And try and stick to it. Don't necessarily increase it over a period of time. If you're at a 8-9% inflation lifestyle, don't make it 20% because it is not sustainable unless you're super rich and super wealthy. But if you're building wealth from scratch, you need to take care of your expenses. And that's one common thing I have seen with a lot of wealthy people. Now, this is a very important slide I want you to focus on. Again, I don't know whether you can see it from behind. It basically has on the first column some names who are considered some of the best fund managers and investors of the world. They're traders, they're investors, they're fund managers. Names like Jim Simmons, George Soros, Peter Lynch, Warren Buffett. You must say, what about Warren Buffett for sure? All these are traders, investors, etc. The name of their fund or organization, the period for which the returns are shown to you. So the last column is what is called as annualized returns. How much returns did they generate annually per annum, compounded annualized growth rate over that period of time? So 1988 to 2018 is a 30-year window where he compounded the wealth at 39%. He's basically known as the best investor ever. 39% compounding over a period of 30 years. And then you can see different names. The last one is Ray Dalio. Ray Dalio is a very big investor, runs this fund as a strategy which is giving 12% compounding over a long period of 27 years. Why am I talking about it? Is very, 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 very important. And I don't know whether it applies to this crowd or not, but I see it applicable in the world around me, including my nephews and niece, my next generation, who are just 20, 21 probably. There is a big pandemic which has started affecting the youth, and that is called trading. 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 We are addicted to money control. Zerodha, Upstocks. Have you heard of these things? Grow. Sorry. Some of you use Grow. How many of you trade? Come on, chalo. Such moment of truth. We're all people who say truth. How many of you trade? Trade doesn't matter. Full time, part time, once a week, once a day, once a month. You have a habit of buying a stock, expecting a short term profit. You do a little bit of futures and options. You buy a call option thinking that the price will double. How many of you do that? Nobody. Wow, what an intellectual crowd. You used to do it. Why did you stop? Got bored. You didn't have enough time, but you made a lot of money. It's a very common thing in the market, by the way. Market is a chakravyu. The first few trades are always profitable for everybody. For everybody. First few trades are always profitable. Then you get confidence. It becomes overconfidence. The market will throw you down at some point in time. Trading is a pandemic because people think quick money is the way to create wealth. And I've seen this happening with a lot of young people in organizations. It is basically got worse after COVID, work from home culture. So you're working from home, boss is not in front of you, nobody's in front of you. You're on a screen, and suddenly you have trading. Add to that the YouTube videos that you see about a lot of people who say, I made so much money, I made so much money. All are scams, by the way. All are scams. Every big trader who says I made money, if you look at their ITR, it has come out a lot of times. Their ITR will show trading losses, but training income. Training, they will sell courses. How to make money. They have not made money. They have lost money in trading, but they will tell you how to make money and earn crores out of that. So, trading is not investing. Investing is different. I'll come to it. Trading is a pandemic. It's an addiction after a point. It's an addiction. I know people who lose money month after month after month, still cannot stop trading. They will say, Kal se band, tomorrow bus. Again, morning 9:15 happens. The trading app opens. Right, this stock looks good, and you start trading. Again, it's an addiction. Like smoking, like a lot of other addictions that you know of. People are going for games which is beyond financial markets. People are playing games also now, Yeah, there's a betting world of Dream 11, etc. So obviously, there's a lot of addictions out there specific to investments, and I believe this because it's not a obvious so-called sin, so to say. People are like, yeah, I want to make money, so what? Trading is a full-time activity. Trading is a business. If you want to do trading, do it the right way. Learn, educate yourself, do a course, work with someone who's a full-time trader, learn the basics, start small, grow from there, do it full-time. No problem. It's a full-time activity. It is not a part-time activity. You cannot spend half an hour a day watching markets by scrolling money control, do some random trades from, I don't know where you're getting that logic from, and then you imagine you will make profits. How much profit will you make? I ask people, they'll say 2 to 3% per month. Why? I've invested 1 lakh. I'm expecting only 5,000 every month. Just 5,000. How much? 1 lakh. What is 5,000 on 1 lakh? 5%. Every month. 12 month is 60%. Look at the screen again. What do you think is common between all of them? All those investors and traders' name I've written. What do you see as common between them? What do you think? No, they have been doing it for long term, but many of them were trading only. They're all profitable, fair. We are showing the profitable traders. There are many. Many who have made losses, nobody remembers them. What is common between them? I don't know. I've not mentioned the capital they are using. Returns is not very high. They are doing it for a long period of time, but that's the returns. Returns is shown for a long period of time. The common element, whether you know it or not, I don't know whether you know them, none of them are part time traders. Warren Buffett doesn't work for Accenture. And then Saturday, half an hour, money control makes that money. Ray Dalio doesn't work for Infosys and does this 1 hour trading on the scale. They are all full time professionals operating with a team, with infrastructure, with technology. And then they are making that kind of returns over a period of time. And we, because we are divine, because we have some Shakti, can do 3%, 4% a month just by looking at the market. Who are you? It is a trap. It's an addiction. People get addicted. Get out of trading or do it full time. It's a full time activity. By the way, there were many, many other people who are also doing it full time, did not make profit. So just because you do it full time doesn't mean you will make profit. Every day I will watch the market morning to evening, I'll make profit. No. You need skills, you need temperament, you need discipline, you need so many things to get it right. It's just like any other business. You want to start a restaurant, for example, not a joke, it's a full time thing. You can't just start a restaurant part time and make money. So, trading is a full time business. Please get out of it. Please stop fooling yourself that you will create wealth like that. 5,000, 5,000 every month, I'll make $1 billion. Doesn't work like that. The best way to create wealth at your age is to upskill yourself. If you get 1 or 2 hours a day extra time which you are using for trading or playing PUBG or Dream 11 or IPL betting or whatever, upskill yourself. Learn a course which could be useful for you. Because if you're earning, let's say, 5 lakh rupees today per annum, by doing a degree, probably that income can become 10 lakhs next year. That's doubling of wealth in 1 year. Trading will not double your wealth in 1 year. You suddenly can double your income, triple your income by upgrading your career skills. So learn something that is connected to your career. Spend time there. Think of yourself as an asset rather than a money control or anything else. Upgrade yourself. Make yourself so good that people will pay you more for whatever skills that you are at. We all can upgrade. So you can save more, you can earn more, you can invest more. That way, create wealth. You will see something which is common about wealth creators. Their income growth rate is faster than the average. Average growth rate maybe X%. The heavy earners, they earn more. Why? They keep investing on themselves. For example, AI is coming in. What is AI? You can learn something around that and upgrade your career. I'm not giving you a career counseling thing because I'm not good at that. But I know for sure part time slash whatever term you use for trading is not going to make you rich. If you want to do it, if you're interested, if you're passionate, do it full time. Back in Mumbai, we run a full time trading organization with 50 people. Come join us. But it's a full time activity there. None of them are doing part time. And they've learned about markets and they've lost a lot of money also. Most people start trading, make some profits. They think they're the next best fund manager. This is my purpose now. Few more trading, a lot of losses will happen. You'll stop. Most people stop because there is losses that accumulates and you don't have money to pay. Worse, people get into debt traps. They start borrowing and go into a trap. And I don't know whether you've seen, but people commit suicides eventually. I've seen all of that. Please do not do part-time trading. Do investments. And when you do investments, the most important asset class is equity. In your long-term portfolio, if you don't have equity, it's almost a crime. It's a sin. It's a financial sin. I'm defining a financial sin. I'm saving for my retirement. For example, if that's your goal, you're saving for your retirement, or you're saving for your children's higher education. You're planning for children's higher education, or just upgrading your lifestyle over a period of time so that you can save enough, retire early, and give all your life to, let's say, community. But you need to have certain wealth for that. The only asset class that can beat inflation, hopefully, over a period of time is equity. Barring real estate, if you do it as a business, real estate as a business, you know certain land pockets happening, something, you time it, you flip it, you do a lot of things in real estate. Barring that activity, no other asset class can give you double digit rate of return over the next 25, 30 years compounded. Not possible. You will not get it. Only equity will give you that. So you need to have equity in your long term portfolio, not for 1 year, 2 years, long term. So if you're saving for long term, which is anywhere more than 3, 4, 5 years, please have equity in your portfolio. How many of you invest? You regularly invest and in equity, SIPs, mutual funds, right? Brilliant. Remember, I said something in the first screen? Sounds boring, but very important. Most of the life's most important things are boring, but very important. So keep investing in equity. What are the options in equity? You already know some of them. Running a business yourself is equity, by the way. Running a business is equity. I hope you understand. Like when you invest in some other stock, you're investing in that business. Running a business yourself is equity. World's richest people are not employees, they're business owners. How? They started a business. The business worked. They worked hard. They put everything in that business, and the business went up over a period of time. The Ambanis, the Adanis, we had, I think, Mr. Mafatlal talking to you earlier, right? All of them have created a business, and the business has created wealth. So, running a business yourself is equity. Whatever be the business, it could be a small business, medium business, large business, that's equity. So, at some point, the way to create wealth is start your own business. Absolutely. We are living in the zone of startups. So, if you have a good idea, you could start, you could try. Obviously risky, but if you succeed, the wealth is disproportionate then. If you don't succeed, obviously you can have losses. So if you don't have the conviction to run your own business, you can invest in other businesses in the form of stocks. Again, a skill to identify good stocks. It's not a random thing. Identifying a good business to invest into is a skill. You need to kind of have the knack for it. I'm not saying you need to have some educational degree. No, you need to have the knack. You need to have that logic that, okay, this business looks good. If I invest in this business, I will make money over a period of time. Because most businesses fail, if you understand. The success rate is very less. So, A, you are running a business. B, somebody's running a business, you're investing in that. But you don't know which stocks to pick. Maybe you're not equipped. It's not your skill set. No problem. You can invest in mutual funds. I'm sure most of you are doing that now. Invest in mutual funds. Simple. There are so many mutual funds there. That becomes confusing now. If you're just starting off, not knowing anything about the markets, no problem. Simply save whatever amount you can every month, 500,000, 5,000, 50,000, 1 lakh, whatever you can save every month, invest in an index fund. That's it. Do nothing else. I guarantee you, you'll be better off than 90% of long term investors. There'll be 10% who could have done better than you by actively doing something. But otherwise, if you would have simply put your money in index fund, no brainer. Don't pick which mutual fund, which fund manager. Simply a index fund, Nifty 50, for example. Mid cap index, for example. Small cap index, for example. Index. Passive investing. You have 100 rupees to invest. 50% in large cap, Nifty. 30% in mid cap, slightly more risky. 20% in small cap. Keep doing this for the next 20 years. I guarantee that you'll be better off than 90% of equity investors. The remaining 10 would either be extremely talented or would be doing it full time. Like me, for example, for me, managing money is full-time activity. I hope I probably do better than that, right? If I have spent all my life in this, I should probably do 1 or 2% extra. Otherwise, most active fund managers are not able to beat the Nifty. You can see that in statistics. And as India progresses, lesser and lesser fund managers will beat the market. So invest in the market. Don't pick stocks. Don't pick fund managers. Just invest in the market. You will not go wrong. If you invest in a particular fund manager, the chances that you will go wrong is 50-50. Because no fund manager is God. Everybody will have their bad phase. So simply the top 50 stocks, top 100 stocks of mid cap, top 100 stocks of large cap, they're in index form. You get those index in the form of mutual funds. Whatever amount you're saving every month, keep investing in that. Wealth creation is boringly simple. You know why most people still don't do it? Well, at some point they'll say, और कुछ चाहिए लाइफ में एक्साइटमेंट. क्या इंडेक्स फंड पिछले 12 साल से यही कर रहा हूँ. कुछ नया दिखाओ. That new excitement, that greed is where the process fails. You just have to keep to this index fund discipline. I'm guaranteeing you'll be better than 9 out of 10 people. I mean, I don't know. That's what I'm saying. It's so simple that you're like, oh, why is everybody not making money then? Everybody's not doing this. Most people are not doing this. It's about discipline, it's about habits. Do you know how to stay healthy? Do we all know how to stay healthy? Eat right, sleep on time, drink a lot of water. Am I overweight or do you think I'm perfect weight? Hey, bindas, bindas. What do you think? I'm overweight or underweight or I'm overweight or the age perfect? You think I leave you 5 minutes earlier before that? I'm 5'7", I'm 95 kilos. Slightly overweight. My ideal weight is 68 kilos. If 68 and 95 slightly, then I like it. Do you think I'm rational as a human being? I understand logics. Do you know? Do you think I know how to stay healthy? Why am I not doing it? It's boring. Waking up 5 a.m. every day and going for a 1 hour walk is boring. But that is important. I cannot do it. But I'm doing it in investments part. I've not stopped my SIP, which I started when I was 17 years old. Works. So, boring things after a point, even if you think is not boring, the world will tell you it's boring. You will meet somebody and say, what index funds, man? Look at the small cap stock. It doubled for me. You should also do it. Look at this crypto, man. Look at crypto. It changed my life. He's saying he lost money. Changed his life. You will get attracted. You're like, oh, crypto. Anybody who in social forums say I made money, simply tell them, please show me your portfolio. Prove it. You found a stock which became 10x, right? How much did you invest in that? 5,000 rupees. How does it matter now? 5,000 rupees became 50,000 rupees. What changed in your life? If you had so much conviction, why did you not sell your house and invest 1 crore in that? If you're a brilliant fund manager who knows how to pick stocks, why did you not take a bank loan and invest 1 crore in a stock that you know will become 50x? नहीं पता उसको. He is also gambling. Everybody is gambling. Please don't gamble. Invest in index funds. Index is a self-correcting thing. Top 50 stocks come into that. If a business does badly, it goes out of index. If a business does better, it comes in index. Self-correcting. The top 50 businesses are always there. You will always make wealth in this. Always. Please don't do complicated things. Please don't do trading. Please don't get into crypto world. Please don't touch what you don't understand. You will not make money like that. If you want more options after you're done all your index funds, you're like, life gets boring. Don't try to do it yourself beyond that. Because beyond that, DIY will not work. Index funds, DIY will work. But picking stocks yourself, picking mutual funds yourself, not everybody's cup of the tea. It's not easy at all. If you want to have big money managed by someone, hire a portfolio manager, but again, difficult. How do you know which portfolio manager will do well? Even he also doesn't know. You ask me, I'm managing money. You ask me, how much will I earn over the next 5 years? I don't know. I don't know what Nifty will do next week. I don't know because I don't know Trump what we will do tomorrow morning. So if someone says, I know market will do this, how? Are you God? So please don't fall into all this nonsense. There is a market. There is 50 stocks in that. If it is large cap, stick to it. Do it every month. Do it every year. Keep on doing it. Very boring, I know. But that's how you create wealth. People who wake up at 5 a.m. every day, do their rituals, do their workouts, eat healthy, sleep healthy, generally will be fit. There'll be exceptions here and there. Same way, you do what I'm simply suggesting, generally you would have made a lot of money. Any deviation from this, chances are you will lose money. And the only reason is you got excited about something. Boring is boring. Anything outside that, very tempting. I always say this to my clients. You get some temptation to do something of your own. Take 10% of your wealth, do whatever you want. Do crypto, do gambling, do whatever you want, but have a discipline of 10%. The problem is you'll start with 10, you'll make a loss there, you'll take some more 10. I'll average out. Suddenly you'll average out 50% of your wealth like that. So if you're very disciplined, take a 5%, 10% of your chunk, your hard-earned money, do whatever you want. But the core has to be boring. Core cannot be the exciting part of your portfolio. So don't get into that gambling aspects. If you want more options, you have PMS, you have AIF, a lot of options are there. Most of it is to make money for themselves. It doesn't really necessarily make money for the investors. If you have any short-term goals, you can go for fixed income investments. We have a lot of short-term fixed income investments as well as long-term fixed income investments. If I was you starting off the wealth journey, every year I'll invest my 1,50,000 rupees in PPF. It is the best fixed income product in India. It gives you a 8% plus tax-free income for retirement, public provident fund, PPF. If you're already working in an organization, you have EPF. You already have an employee provident fund, that's good enough. Then don't do PPF. But if you're self-employed or if you don't have EPF, employee provident fund, do PPF. It's the best fixed income product in the world, in India. 8 point something tax free, guaranteed. Just keep on investing in that. Between fixed deposits and mutual funds, pick mutual funds. FDs, please avoid. It's not a good product. Good for the bank. Nothing. If you have emergency funds, if you just want to keep your money safe for 1 year, look for something called arbitrage funds. More tax efficient, more liquid. You will get the money back in 1 day. If you break an FD, your interest rate goes down. FD is not a liquid product. FD is not a tax efficient product. Please don't go for FDs. So if you have a fixed deposit, look for arbitrage funds. It's a category of debt mutual fund. Safe. You'll get more than FD by probably 0.5% and more liquidity. So if your emergency funds are put in FD, not very efficient. Then you have other products also if you want to go for it. But again, if you're investing for long term, equity options are better. Record keeping, super important. Give me just 2 minutes, I'm done. Record keeping. Whatever you do with your insurance, investments, wherever you put your money, all the legal documents, all the insurance papers, please don't keep it a secret. Your family has to know at some point. I have seen a lot of cases, including as recently as a month back, when someone passed away. A very good friend of mine passed away at the age of 36. 36, went to sleep, did not get up. 36, left behind wife, a small kid. The first call I get from his wife after a day or two is, Harish, do you know whether he was insured? His wife does not know whether he was insured. So even if he has a life insurance, who will claim now? You need to claim, if you understand. Insurance company will not come to your house. So you need to ensure that all the important documents are known to your family members, whomsoever is in your family. If your family members you think should not know, a trusted friend. In the olden days, I don't know whether it's still prevalent. Maybe your family, probably you'll know. Has your parents taken a LIC policy? How many of your parents have taken LIC policy you know about? Okay. How many of those policies, in your knowledge, were taken from a family friend or a relative? The agent was a family friend or a relative. Why do you think it happens? Trust. Yes. A. Good. Very good. Trust. Good. If something happens to if something happens to you, they will know. That's important. That's why a family friend or a relative. Suppose I am a person who took an insurance from my brother-in-law. I pass away. My brother-in-law will know, right? If you take it from a professional relationship person, like let's say insurance agent that nobody of your family knows, and something happens to you, the agent may also not know about it. That's why the insurance concept was always first circle. It has its own side effects. A lot of mis-selling used to happen. A lot of emotional buying used to happen. But the fact was, if something happens to you, they know. They would come to your house later and say, Babiji, yeah, Joby, whomsoever is a dependent, there was a life insurance policy. This is the amount. So please don't keep all of this a secret. You don't have to tell them. Maybe there's a drawer in your home. You have kept everything there. Just let somebody know. A lot of documents are there. Because when I say this to my parents, or when I did this almost 20 years back, they went mad. They're like, don't talk all this nonsense that you will die and all. Because Indian families don't like this talks. Apshagun. But practical bhi hona padega yaar. Okay, so don't talk to your parents. Tell a friend, tell someone. There is this entire list of documents. Now we get DigiLocker, if you understand. Amazing concept. DigiLocker has everything now. It has it does a thing also that automatically you can give the backup to your nominees. A lot of people do this also. They put everything into their Gmail. All the documents they'll put to their Gmail. Gmail has an option, if you know. If I don't log into this account for X number of days, forward all of this to someone. There's an option in Gmail. So think, I'm putting everything there and telling him if I don't log in for X number of days, assume that I'm not there. So you just send it to my family members. Because they have to know your insurance investments. They are the ones who will take care of it. So record keeping is super important. By the way, now we have all the things online. Insurance is online, as in the database is online. I'm sure you know your NSDL statement for investments. Same way, insurance also you get from NSDL now. They have an insurance repository. DigiLocker works beautifully. So please ensure all of this is not a secret. In last 2 minutes, I'll just quickly summarize what I believe should be the key takeaway. Invest in yourself more than investing in any asset. Please upgrade yourself, upgrade your income. Automatically, your savings can go up. You can create more wealth. If you're in 20s or early 30s, planning to buy a house, be extremely careful. Now, it's a little controversial. I'll share it with a pinch of salt. Don't take it as a wide statement. Generally, the first house you buy is a big wealth destructor for your equity journey. You'll pay a big lump sum for your down payment, pay a lot of EMIs, which is a big part of your salary at that point in time, and you're not left with enough to create wealth. And that house is not an asset, you're living in that. So I would always advise buy your first house jitna late ho sake utna. Especially in cities like Mumbai, Bangalore, Pune, it's expensive cities. If you can push it by few years, stay on rent, save more, put into equity, build wealth, you'll be able to afford a house better there. Your home loan component can be lower because equity as an asset class rises faster than real estate as an asset class. Most places. in Gurgaon also. Don't go by this last 2 years of trend of 50% jump. Take a 10 years trend. If you're invested in equity over a period of time, you would have seen that. So, first house is tricky. I've seen it kind of destroying the journey very, very early. Again, controversial. You'll say house is important. It's very good. I know. But I'm just saying time it better. So, take help in terms of when do you want to buy your first house. Do a good financial planning at that point. Otherwise, next 10, 15 years gets affected. Unless you're in an income where income is so high that EMI doesn't pinch you. Otherwise, EMI become 50, 60% of your income. So first house, be very careful. Be disciplined, much more important than your trading income, etc. All of you are very disciplined, I know, in your life. Be disciplined in your investments also. Outsource wherever needed if you want to. And please maintain records. I'll stop here. Thank you so much. I'll be happy to take any questions. And then all is ending. Those are my contact details. You can reach out to me later also if today we are not able to interact. I don't know whether it's visible. 9819130637. I'm reading it out because it may not be visible to everyone. 9819130637. You can WhatsApp me anytime. If you randomly call, I may not pick up, but WhatsApp is useful. Any query, anything that you want to ask if we miss out today? Yes, sir. Correct.
So, top those
Don't try to time too much. Just keep investing. Monthly, daily, weekly, whenever you can save, invest. Simple. Like the goal is very simple. You have some savings, put in an index fund. There are apps like Grow, Kuvera, Coin, Zerodha. Very easy to invest, zero cost. Minimum investment typically is 500 rupees for most of these schemes. Whatever you can save, just keep accumulating. Don't try to time it and all. I'll I'll be very honest. It doesn't matter which day you invest. There is enough statistics. Which day of the month, kuch nahi farak padta. Nothing matters. The most important is discipline. Keep investing every time. Doesn't matter monthly. Can be quarterly. Can be weekly. Whenever you have savings, keep investing. Yes, sir. Most of the people will now go into new tax regime where there is no ATC anymore. So ELSS etc. will not come into picture. If you want to save tax, ELSS is good. But most will go into new tax regime. It's a better regime. So there is no 80C in that. It falls in the same bucket. If you have EPF, you need not do PPF. Both are fixed income. Build equity. Please build equity. I don't know how to take question from far.
Hare Krishna. So whoever want to ask question can raise their hands and the mic will come. And be quick in asking questions. We have time till more 5 minutes, 6 minutes to be precise.
So whomsoever has the mic can ask a question.
Hare Krishna, thank you for this beautiful action-packed session. My name is Harsh and I'm regular with my SIP. I have a portfolio, I'm doing it. But most of us, so all of us are ISKCON devotees. We don't have much aspirations in our life. For example, if I come to you, you spoke about investment, you spoke about health insurance, term insurance, you spoke about some chronic don'ts, you spoke about some important do's. If I come to you for a personal counseling session, I'm not doing anything. And for example, my goal is to accumulate a portfolio of maybe 1 crore rupees, because with 1 crore an ISKCON devotee can live an Ambani like life. So my goal is to secure a 1 crore rupee portfolio. I don't have a health insurance, I don't have a term insurance. What are some specific actionable things that all of us can do so that we don't commit a financial sin?
Same thing. You have to go do the same thing. You have to first take insurance again.
Okay.
Please take it. Don't, if you don't have it, take it. So if you said you don't have insurance, I'll still say please take one, unless you don't have any dependents. In terms of investments, invest a certain amount every month. Make it 1 crore.
Fair enough. Can you quote an example of an amount that one is important to make each month so that we can actually hit 1 crore rupee?
Excel लगेगा. Excel.
तो भी कुछ आपका तो इतना एक्सपीरियंस
Depends on rate of return. So I would imagine 15,000 a month, 15 years is 1 crore.
Okay, cool. Thank you.
But these these shortcuts don't work. You have to first invest. Keep on investing. Yeah, detail and yeah. Quick questions.
So many of my friends are like working in quant companies and HFTs, So they say that options tradings and these are like nowadays it's not fighting with a person, it's fighting with a high frequency algorithm. So these markets are very much influenced by these kind of quant companies.
It is.
So are mutual funds and these kind of stocks are also being influenced by these companies?
No.
Not at all.
Trading is getting affected, not investing.
Okay.
So the volumes get affected. The fundamentals of a company doesn't get affected over a period of time because of all this. So long-term investing will not be affected.
And what are the funds which you told for the very short term and low tax liquidity?
Arbitrage.
Arbitrage.
That's the category, arbitrage. Most mutual funds have it.
Hare Krishna,
Hare
Prabhuji. Regarding health insurance, use
Hare Krishna, please. He's asking questions. Let him ask questions.
Why there is so much of crosstalk happening?
Yes, sir.
Yeah, this question is regarding health insurance. So I'm a corporate employee, so I already get health insurance. So suddenly, if we can see loss of
If it is covering the family well and you intend to be in that corporate for the foreseeable future, it's fine. The problem is at some point your job may not be there, you may
Yes.
quit. So that policy will go
yeah,
and you're 10 years older suddenly.
yeah.
At that time, if you take a new health insurance, it will be very costly.
yes, yes.
So always have your personal insurance
Okay,
apart from corporate.
yeah.
Always will help you.
Thank you, Prabhuji.
You know, to speak in the mic, anybody.
Hare Krishna. Rosie here.
Who? Yes.
Here. In front.
Oh, yeah.
So regarding picking a mutual fund, I've learned and what I understood is like the returns and apart from that risk ratios. So apart from this, should I consider anything else?
You should not consider all this also if you're just a
Yeah.
DIY. Index funds is good enough.
Yeah.
Don't go into active.
No, I wanted to diversify. So mid caps, large cap, and small cap.
Most will not beat the index. I'm again telling you. You will
Okay.
spend a lot of time, pick an active fund. It will not do well over a period of time. Index.
Okay. Thank you.
You talked about investing in NPS. So NPS is like the amount NPS. So amount gets stuck for 60 years, like we turn 60. Is it a good option?
Very good option. NPS is a good product.
But we can't use that money till we are 60.
That's fine. It's a retirement product. NPS is a retirement product. Very good product. If you can invest 50,000 a year, please do it. NPS, National Pension Scheme, a very, very good product.
Very well. This will be the last question. After this question, we'll put the form there where you get two questions. We'll compile them and send it to the Poptamat to be discussed.
Sure. Yeah, sure.
This will be the last question. After this, group 1 has to do to their winning.
The lucky last one.
Do you advise for US stock investing?
I mean, so it's like, should you do 10 standard first or 5th standards? You do 5th standard first. Build your India base first. US stocks to be later.
But
Next 25 years, I think Indian equity will beat US equity. So I would invest in India more.
and which platform we should use, because I was using one app and I got the US stock returns for past 5 years was quite more than
From India, you cannot invest in US directly. Most apps are fraud. From India, investing in US is not easy. It comes under LRS. It's not.
before it was easy, but like for
It was
past
never easy. All these apps just made it easy.
yes, it's from the apps.
Not a way to do it. It's not legal. Please don't use apps to invest in US. You have to go through brokers like Interactive Broker. Different process, very expensive. The transaction cost itself will come to 5-6%. Don't rely on these apps. Please don't for US. India is fine.
Vested we was using.
Please don't use platforms to invest in US equity. You will burn your hands at some point. The best way is to go through a broker, but transaction cost is too high. I'm telling you, the dollar rupee conversion is very high. Don't get attracted with the returns they are talking about, like Tesla and all that. Indian equities is good enough. We are doing well. थोड़ा greed कम करेंगे तो अच्छा है.
Very good.
Thank you so much, sir. Thank you so much. All the best to all of you. Thank you so much.
Hare Krishna.